Good morning. This is Horizon's Middle East and Africa, our top stories this morning. More tariff threats. President Trump says he'll impose a 100% duty on chips unless they're made in the U.S. He also doubles the levy on Indian imports to 50% over Russian oil purchases. Russia-Ukraine truce. Trump says there's a, quote, very good chance he'll meet with Vladimir Putin and Volodymyr Zelenskiy soon to broker peace. Plus, dovish signals. 3 Fed officials voiced concern about the U.S. labor market, with comments pointing to a potential rate cut in September. Well, it's just gone 8 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. You saw a bit of a recovery yesterday in Wall Street, with both the S&P and the Nasdaq ending up in the green. The latest tariff news overnight, well, twofold, but the semiconductors one, 100% tariff rate to be applied. Sounds like a very big number, but there are a lot of exemptions, and some of the biggest names in the world, the likes of Apple, Nvidia, TSMC, look like they are part of that group of exemptions. So actually, we're seeing a bit of a relief rally this morning overnight, and this explains at least partially why we are seeing green on the board this morning, because the semiconductor tariffs, those sectoral tariffs, were not as bad as people thought they might be. And of course, we speak about further dovishness being priced into the U.S. yield curve as well, with more Fed policymakers citing weakness in the labor market. So this is the picture for today. Brent also keeping a close eye there on all of the developments. It's up 0.9% this morning. I would say you've got some bearish drivers on one hand. You've got the impact these tariffs are going to have on global demand. You've got the fact that some of the risks, the geopolitical risks, are receding after that Witkoff meeting in Russia, the potential meeting with Trump, Putin, Zelenskiy next week. All of that, I would say, a bearish driver for oil. But on the flip side, we had yesterday data showing very low stockpile inventory in the U.S. And Trump has also put further pressure on India with those secondary tariffs, an extra 25% tariffs on India because they've been buying Russian oil. So those are some of the bullish drivers today. The bullish drivers are winning. Pound in focus today, just shy of 134 is where we're at. And, of course, all eyes on the Bank of England meeting later today. They are fully expected to go for a 25 basis point cut, but we will be piecing through the language, especially if they stick to their gradual and careful forward guidance in the future. Switching over, let's take a look at the terminal chart today. And this is what caught my attention. So this is, we are talking about the Bank of England still. And basically the backdrop here is inflation forecasts have been on the up, while growth has been pretty muted. So this is your definition at the end of the day of stagflation, with those upside surprises recently in inflation and some weakness appearing in the UK labour market. So that's what the Bank of England have to contend with. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, how are Asian markets digesting this tariff news, especially with semiconductors in focus now?
They are digesting it very well. There's a sense of relief because this is one of the key things, right? The threats from sectoral tariffs, that overhang sort of being removed, given how there will be exemptions. As you alluded to a short while ago, TSMC does have commitments for U.S. fab investments, and then Apple suppliers are doing well as well. The Taiwan chip maker is surging by the most since April to record highs. That's helping to lift the gauge in Taiwan as well. Even in South Korea, SK Hynix, Samsung Electronics, they're set to be part of some of these exemptions as well. So overall in stocks, it is looking pretty upbeat. But aside from that, just highlighting data out of China as well, because exports, imports, they beat estimates, and China was essentially able to make up for the lower exports to the US by exporting more to the Europeans and some of the Southeast Asians as well. So that is providing a bit of, sentiment relief as well. Jumana.
Yeah, really good to flag that. Actually, the China export numbers picking up to other parts of the world. Avril Hong in Singapore, thank you so much. Well, President Trump's global reciprocal tariffs have just come into effect. So those are the ones that were announced last week. They've now gone into effect today. But he's still surprising markets with fresh levies. The president says he will impose a 100% tariff on chip imports, but exempt companies moving production back to the U.S.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge, even though you're building and you're not producing yet in terms of the big numbers of jobs and all of the things that you're building. if you're building, there will be no charge.
For more, let's bring in News Desk editor Jill Deesis. Jill, I saw that headline this morning when I woke up and I thought, wow, this is a humongous number, 100%. But then I realized that there are all of these exemptions. So actually, net, who are the companies that are going to get hit with this 100% tariff?
Well, Jumana, I think, as you outlined at the start of this program just a couple of minutes ago, it would actually seem like a lot of the world's biggest chip makers may be exempt. So just take, Trump's quote that we just heard there, where he's talking about if you intend to build some kind of domestic production, so within the United States, if you already have that done or if that's your intention, that you potentially would be exempt from this kind of tariff. So, I mean, in theory, that covers, companies like TSMC, the world's largest chip maker, which several years ago, established this plant in Arizona. Obviously a lot of companies that are working there. I think, in the grand scheme of things, obviously, some domestic production, it's not like TSMC can produce, the entire global demand for its chips, based out of that one facility. But again, if you're just taking Trump at what he's talking about here with these types of commitments, maybe that includes an exemption. I mean, he gave this speech, at the White House. He was accompanied by Apple CEO Tim Cook, who, presented a $100 billion investment proposal, adding to some existing investment commitments that they already had. If the plan ultimately is that you can kind of secure an exemption from tariffs with these types of commitments, then that would seem to cover a lot of space. But again, it's really, really just so difficult to tell because we need to see this kind of thing actually written down on some kind of a white paper where we get a better idea of what exactly these exemptions would cover.
Yeah. And meanwhile, he is once again upping the ante when it comes to India, doubling the proposed tariff rate to now 50%. And where does this end?
Yeah, I think when it comes to India, Jumana, that's another one that's kind of difficult to tell at this point because it does seem like, India has become kind of collateral damage in this, ongoing pressure campaign that Trump's trying to launch against Russian President Vladimir Putin. Part of that big, idea of applying these secondary sanctions or tariffs on, nations that purchase Russian oil to try to get Putin to end Russia's war in Ukraine. This doubling of tariffs does seem to be a pretty significant part of that, given how much energy or, how much time and attention Trump has really given to, India's purchases of Russian oil. I think a couple of things to really look out for there. So apparently this doubling to 50% would take place, in 3 weeks, which implies some room for negotiation that India and, President Modi ultimately, or Prime Minister Modi ultimately have there. But I'd also point out that, there's another deadline that Trump has really given to Putin on the war. That's tomorrow, August 8th. And so I'm not sure how much that ultimately kind of plays into the calculus there. Maybe that gives India a little bit of negotiation room. But again, I think it just, kind of goes to show that, India is sort of trapped in this pressure campaign here. And, obviously that has resulted in very significantly high tariffs.
Yeah, I mean, when you frame it like that, it would be difficult to pair the two and square the two up together, giving Putin extra time, but not giving that extra time to India. It's difficult to sort of dovetail. Bloomberg's Jill Deesis, thank you so much. Staying on the latest trade headlines, Switzerland's president has left Washington without announcing any success in lowering the 39% tariff that President Trump has put in her country. A source told Bloomberg that a delegation led by Karen Karras-Sutter presented a new proposal to U.S. officials, but failed to clinch a better deal. Switzerland currently faces the highest tariff rate of any developed nation. For more on how markets are reacting to the tariff news, let's bring in Eric Robertsen, Global Head of Research and Chief Strategist at Standard Chartered. Unlucky, I say, unfortunate, I guess, for the Swiss president. But look, tariffs have actually gone into effect today. So it's happening. These higher reciprocal rates are actually going into effect. Let's see what happens operationally. Now is the time we get to see how this is actually going to underlying impact the U.S. economy. What is your expectation for the tariff real hit to the U.S. economy in coming months?
Sure. Thanks, Jumana. Look, the first thing I would say is we do expect U.S. growth to soften. We're starting to see tangible evidence that it's affecting the labor market. I think something that most of us had been expecting for a number of months now. I think the challenge for the U.S. economy is in some ways similar to what we're seeing in some of the other major economies around the world, which is some downward pressure on growth and activity but still elevated prices. And I think that risk of as you called it earlier in the show, stagflation is correct, right? And it makes the job of central banks very, very difficult, right? They want to ease monetary policy to support growth, but there's this lingering or residual impact of sticky prices.
Which element of the Fed's two mandates do you think is going to be the one they place more emphasis on? Is it the weakness in the labor market, or is it the potential for inflation rates to start moving in the wrong direction?
It's a great question. In the short term, which I would describe as the next 2 or 3 meetings, I think they'll focus on the growth aspect. Yeah. And I say that because if you look at the Fed funds policy rate in absolute terms or in inflation-adjusted terms, it's still a little bit restrictive. And so the Fed does have this room to ease monetary policy. The ability to ease aggressively, though, is something that we don't think is possible because of that still elevated inflation rate. Now, if we get core PCE down to 2% by the end of the year or early next year, then it gives them flexibility, but I don't think that's going to happen.
So do you think markets are overpricing in rate cuts at this point for next year? Not necessarily September, but looking out to 2026.
We do. The markets are priced for about 125 basis points of cuts between now and the end of next year. I think you could get 25 to 50 this year, which is our forecast. But then I think next year it becomes more difficult. We really need to see a better balance between growth and inflation.
Yeah. So the dollar has been interesting because it looked like it had started to recover. And then once again this week, it's on the decline once again. And I wonder whether that's to do with the weakness in the U.S. data or something bigger and structural, which is that once again, people are beginning to question this theory of U.S. exceptionalism, institutional governance, the fact that Trump fired the head of the BLS commission when the data came out that he didn't necessarily approve of. What do you think is going on with the dollar here?
At the risk of hedging my bets, I think it's a little bit of all three of those factors, right? I mean, look, the reality is the very weak labor report, I think, brought back into focus the downside risk to the U.S. economy. So that brings rate expectations into the picture for the dollar. The second one is this structural factor that you mentioned, which is the potential decline of U.S. exceptionalism, concerns about institutional credibility, et cetera. But as you've been talking about on the show, and I think this will come back into market discussion later in the year, is that it's going to have a negative impact on the rest of the world as well, right? We see softer growth in a number of major economies in the second half of the year, including China, including Europe, including parts of EM. And I think when that starts to come back into play, people will realize that maybe the U.S. is not as exceptional as it was, but the growth differential may still favor the U.S. economy.
Yeah. And you're seeing that in stocks, obviously. That's where your biggest EPS growth is. It's still in those handful of tech stocks. I just want to come back to the USD, though. In that environment that you describe, what do you buy against the dollar? If European growth is going to suffer, if UK growth is going to suffer, what do you buy?
Well, one thing that's been interesting over the last few months is we've seen global investors moving back into what we would call higher carry or higher rate FX stories. And the low levels of volatility across asset classes has been a big support of that. Now, as we wrote last week, we're a little concerned that with the low level of volatility across FX, rates, equities, commodities, the markets may be overly complacent here. And so I think there's a little bit of risk for those sort of high carry strategies. But then you start to ask questions about, in this sort of a world, where are the safe havens? If it's not the dollar anymore, maybe it's the euro as a relative story. Maybe it's gold. Right? And we've seen gold continue to perform very, very well over the last 6 to 9 months. And then you get into the questions of other assets. So,
the Swiss franc still be a safe haven story now that the U.S. administration has set their sights on Switzerland?
This goes to the point that you're making, right? Which is every currency, every asset seems to have a negative story going on in the background, right? Yeah. So then it becomes a question of relatives. Yeah. And look, the reality is nobody allocates their entire portfolio to one currency. I think what we're seeing today is a broader diversification, a diversification out of U.S. equities into global equities, right? So it's a more balanced approach. Correct. It's the same thing in FX, right? Yes, people are reducing their dollar holdings, but they're still holding quite a bit of dollars, especially in the corporate space. Yeah. You're just seeing an increase in allocation to currencies that have been unloved for a number of years.
Yeah, so interesting. Eric, really good to have you on. Thank you so much for helping us to make sense of all of this. Eric Robertsen, Global Head of Research and Chief Strategist at Standard Chartered. Now, companies around the world are continuing to grapple with a shifting trade landscape. From Asia to the Americas, top CEOs are weighing in on the impact of tariffs.
The geopolitics and tariffs and things of that nature are still something we're all learning about as an industry. So as a result, we didn't give full year guidance.
Tariffs are always a bad deal for consumers. When you look at 15%, you can say 15% is better than the 30 that were announced, but it's worse than zero.
We did not expect to be able to ship to China because of some of the regulations. I think this administration, the Department of Commerce, the government has actually been very open.
I hope that the impact, right, is going to be minimized, but it's actually out of our control.
I'm very hopeful that the Trump administration understands the predicament that we are in as they make these bilateral trade agreements, and they are going to work with us to do the right thing for our U.S. manufacturing companies.
President Trump says there is a very good chance he'll meet soon with Vladimir Putin and Volodymyr Zelenskiy, trying to broker peace between Russia and Ukraine.
President, have Putin and Zelensky agreed to a summit yet? And where and when would that be?
Well, there's a very good prospect that they will. And we haven't determined where, but we had some very good talks with President Putin today. And there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
How close do you think you are to a deal?
Excuse me?
How close do you think you are to some kind of deal?
Well, I don't want to say. I've been disappointed before.
U.S. Envoy Steve Witkoff has been in Moscow just ahead of the August 8th deadline Trump set for Russia to reach a truce or face potential sanctions. Joining us now is Tony Halpin, who leads our Russia economy and government coverage. First, let's just start with that Witkoff meeting. Apparently went on for 3 hours with the Russian president. Did anything come out of it? Do we know what was discussed?
Yes, I mean, it was their 5th meeting this year, which must be something of a record for anyone with Putin. But we don't actually know very much detail about the substance of what they discussed. As we've noted, President Trump seemed quite optimistic about the outcome of those talks. But the details so far are shrouded somewhat in mystery. The Kremlin simply limited itself to saying that it sent various signals to Trump and received some from the U.S. president.
Once again, President Trump floating this possibility of a three-way meeting between himself, Putin, and Zelensky. What is the likelihood of that happening?
Yes, you seem quite optimistic about that. We've yet to hear details of when that may take place, and we don't even know which countries may be candidates for such a meeting. But one key issue, of course, will be whether there'll be some sort of ceasefire to be announced before such a meeting could take place. We don't see indications of that yet, although there's been some ideas floated about a land swap involvement for any kind of agreement. We have to remember that this is all Ukrainian territory to begin with, so Russia's not really making any concessions there in order to get a meeting with Mr. Trump.
It sort of feels like these conversations are happening in a parallel lane versus everything that's still happening on the ground right now, because the war is still raging on between Russia and Ukraine, and if anything, the situation is getting worse.
Yes, that's right. I mean, if you remember, the deadline tomorrow was for Putin to agree to a truce. Clearly, he's not going to do that. The war is continuing on the ground. Russia is making some slow advances, not very much, but it's continuing to bomb Ukraine, and Ukraine is continuing to have to defend itself. So on the ground, war continues as usual.
Yeah. Okay, Tony, thank you so much. Tony Halpin, Bloomberg's team leader for Russia economy and government coverage. Now, Ambassador Mike Huckabee says Israel has U.S. support to make what he describes as, quote, tough decisions as it considers whether to completely occupy Gaza. Huckabee told Bloomberg that President Trump is fed up with fruitless efforts to clinch a ceasefire. Israeli Prime Minister Benjamin Netanyahu is set to convene top cabinet members to decide on what he's described as a plan to secure victory in the 22-month war with Hamas. And still ahead this hour, Middle East grocer Spinneys posts double-digit revenue and profit growth year on year. We'll speak to the CEO Sunil Kumar about the results as well as the business outlook. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. Ghana's defense and environment ministers have been killed in a helicopter crash. A government spokesman says the ministers were among 8 passengers and crew aboard a military helicopter yesterday morning, traveling from Accra to Abuasi in the center of the West African nation. The flight disappeared from radar screens, with local television later showing smoke rising from the crash site, leaving no survivors. Zambia's dollar-denominated bonds are leading losses amongst emerging peers. This comes after the IMF warned that the country's capacity to service its debt remains weak. The notes had rallied nearly 50% since April on expectations an IMF upgrade in debt-carrying capacity would unlock more favorable repayment terms. Ghana's inflation slowed more than expected in July, boosting hopes for more interest rate cuts. Annual inflation eased to 12.1%, helped by a strong cedi and higher gold and cocoa prices. The central bank slashed rates by 300 basis points last week, and with inflation on track to hit its target by year-end, economists expect further easing could come as early as September. Nigeria's central bank is retaining high double-digit yields on one-year paper to sustain dollar inflows and shore up the naira. At Tuesday's auction, the central bank sold over 2 trillion naira worth of the high-yield papers, with up to 40% of demands coming from offshore buyers. Analysts say the strategy is helping to stabilize the currency after last year's steep devaluation by boosting much-needed dollar inflows. Business travelers and tourists from Malawi and Zambia will have to shell out $15,000 in refundable deposits to secure U.S. visas. It's a bid to curb visa overstays. The measure kicks in on August the 20th and adds the steps taken by the U.S. government to limit the arrival of people that it deems undesirable. And a look at equity futures. Things are looking up. S&P futures up 0.2%. European markets up 0.3%. It is tariff implementation day. Don't forget that as we speak to those additional semiconductor tariffs and the India tariffs that President Trump also announced overnight, a doubling of those tariffs. But coming up, the UAE's largest fuel and convenience retailer, Adnoc Distribution, reports a 12% jump in first half profit year on year. We discuss the bottom line with the CFO next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. More tariff threats. President Trump says he'll impose a 100% duty on chips unless they're made in the U.S. He also doubles the levy on Indian imports to 50% over Russian oil purchases. Dovish signals. 3 Fed officials voiced concern about the U.S. labor market, with comments pointing to a potential rate cut in September. Plus, first half retail earnings. We speak to Adnoc Distribution and Spinneys as they both report double-digit profit growth year on year. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. Tariff implementation day, so those reciprocal tariffs have now technically gone into effect. It's impacting about 90 countries around the world. In addition to the new round of tariffs that President Trump announced yesterday, 100% on semiconductors, but with a lot of exemptions. If you are a company that produces or invests in the U.S., you are exempt. So the likes of Apple, for example, exempt, trading up 5% in after hours this morning. And explain some of the green that we're seeing today on these screens, both S&P and the Nasdaq up 0.2%, also accounting for the fact that more Fed policymakers are beginning to sound dovish, especially Mary Daly, one of the voting members who now has started citing the weakness in the labor market, so raising expectations of a more dovish Fed and a September cut. Brent also in focus today. We're trading, below $68. On the last couple of days, actually, the trend has been one of weakness for the energy complex. But this morning, we're on the up again, up 0.8%, perhaps on that stockpile data that's coming through from the U.S. yesterday and the extra tariffs that the U.S. have now put on India because of their purchases of Russian oil. And pound also in focus. We've got the Bank of England meeting today. They are expected to cut by 25 basis points, so we will be watching out for the language, whether they change any of the forward guidance vis-a-vis that cautious line on limited and gradual easing. Switching over, I also want to flag one chart that I was looking at this morning, which is European gas markets. And you can see over the course of yesterday, we actually dropped quite substantially, down 3.3%. You may be asking why. Well, it is on back of those Russia discussions, the fact that Witkoff met with Putin for a couple of hours, President Trump talking about the possibility of that three-way summit at some point in the coming future, removes some of the possibility of supply restrictions in that space. So European natural gas futures down 3.3% intraday yesterday. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, walk us through it.
Yeah, we're seeing Asia stocks in a really good mood, and the chip makers are the big boost you see on the region's benchmark. It's the commitment to investing into the U.S. for the likes of TSMC, their fab investments, for example. That is adding to the view from investors that these are the firms that are going to get exemptions from the 100% chips tariffs, SK Hynix, Samsung Electronics, along with that as well. So those are the stocks that are really lifting the gauges. If you look at TSMC, the climb that you're seeing is by the most since April, and it's a record high. Aside from that, we are seeing the Indian stocks, the Nifty, it is under pressure. We did get a hawkish hold of sorts from the RBI just a day ago, and then, of course, 50% tariffs from Trump potentially. So that has put a bit of a downdraft to the mood in the region. But aside from that, just highlighting China data as well, unexpectedly, that growth we're seeing in exports out of the Asian giant, Jumana.
Yeah. Well, notable reaction out of TSMC, the world's largest foundry, up 4.9% on a day where Trump announces those semiconductor tariffs, those exemptions obviously coming as a welcome. Avril Hong in Singapore, thank you so much. Now, the UAE's largest fuel and convenience retailer, Adnoc Distribution, has reported double-digit profit growth for the first half of 2025. Net profit grew 12.2% to $358 million. The fuel retailer continued its strategic network expansion, adding 47 new service stations. For more, happy to say that we're joined by Ali Siddiqi, the CFO at Adnoc Distribution. Good to have you with us. So I was reading in your press release, this is the highest recorded first half EBITDA and the largest ever first half fuel volume for the company. So what is driving all of this growth?
Yeah, spot on, Joanna. So as the largest convenience and mobility provider, it's great to see us sort of further improving our records from the past. So record EBITDA for the first half of the year. And what is driving it? I would put it into 2 to 3 logical buckets. The first one is fuels. We're seeing very encouraging growth in fuels. We actually set a record for fuels at 7.6 billion liters. It's about 6% growth. And that's across all the 3 markets. So it's not only the mothership in the UAE. We're also looking at Saudi Arabia, looking at Egypt. They're all showing very encouraging results. Yeah. And that's a function of multiple things. Obviously, the macros are looking very good. Mm-hmm. We've got good, the GDP growths across the region have been very healthy. We're seeing increase in the vehicles as well. But most importantly for us, we need to have 950 stations with thousands of staff over there performing. And we have seen great operational excellence results, and that boosts the fuel volume.
You know, you speak about the growth in all of your 3 markets. For the UAE, I was going to ask you whether some of that fuel volume goes hand in hand with the influx of new people, the new population that's moving in to the cities here. Is that driving? It
absolutely does.
More people are driving around in their cars. So,
absolutely.
Yeah.
The mobility has been very encouraging. Mm-hmm. We have had people on the roads. We have had discretionary mobility going up. And we are there to serve these customers. So we are there to actually capture that volume. And many in our markets where we compete, for example, especially Dubai, we have seen very encouraging turnout from our customers who make a choice to come to an Adnoc station.
Has there not been an impact from the rollout of electric vehicles and the rise of electric vehicles ownership?
It is certainly coming in slowly. but we have 300 EV chargers now available across. And Jumana, that's 300 chargers is one dimension. The other dimension is future-proofing our business because of this.
Yeah.
And there is an economic multiplier. If somebody's waiting for 15, 20, 30 minutes for their car to be charged, we have QSRs, quick service restaurants available. We have got C-stores available.
Yeah.
So there's plenty for those customers to do.
Do you see that as a fast-growing business, the EVs charging business?
We certainly do. It's ramping up. We are already seeing utilization rising significantly between the years. Literally, it has doubled. Obviously, our footprint has doubled as well, tripled, quite honestly, since middle of last year. So it's a business which we are very excited about. And remember, we are a supplier of energy, be it fuel molecules or be it electrons.
Yeah.
We are excited about both.
So you talk about your non-fuel retail business, and I'm presuming that's where the higher margin is. So talk us through growth in those areas.
Yeah, so we have got 4 or 5 very key verticals in them. It's spearheaded by our C-store business.
Yeah.
And within C-store, Jumana, the most lucrative side, or the ones where we have seen the best returns, is the food and beverage side of things. Our coffee line has been very popular. Just to give you an example, we are looking at 27% conversion in Q2 alone. So people who come to our station, 27% of them actually leave their car, come to our store and buy our coffee.
Okay.
And this number used to be 25% in the previous quarter, 24% in the prior quarter to that. So we are seeing great sort of help there. Also, our loyalty program is a key enabler. 2.5 million members of the loyalty program, that is helping. So C-store obviously is a big success story, followed by car wash. We have got our property business. We've sort of adapted a new strategy. So you have seen quick service restaurants coming in, and they have had very encouraging results.
Yeah, what is the outlook for the rest of the year?
The outlook for the rest of it, we continue, the momentum is continuing. We don't see the momentum going down as such. So we continue on the strong. If you remember, we had record results end of 2024. We have record results end of H1. Unfortunately, it's very difficult for me to sort of claim yet another record till it's delivered. But we are definitely anticipating strong performance.
Do you have plans for further geographic expansion?
We are looking at multiple options. And there is a deal pipeline with varying level of maturity, but of course we are not in a deal fever, right? So a deal has to make sense. It has to be EPS, DPS accretive. We truly have to do to match the kind of profile we have in our balance sheet and P&L. And only then we will actually do a deal which is truly value accretive to our shareholders, it's EPS, DPS accretive, and most importantly, it's at the right price. So we are looking at multiple options.
Okay, that's good to know. Great to have you with us on our show today. That was Ali Siddiqi, CFO at Adnoc Distribution. The Bank of England is set to cut interest rates today to the lowest level in 2 years as policymakers contend with a slowing economy and a jobs market rattled by higher taxes. Our UK correspondent Lizzie Burden joins us now from London. So Lizzie, the cut is pretty much baked into the market at this point. Everyone is expecting them to go for that 25 basis point cut. What surprises are we on the lookout for? Is it the split? Is it the language? What are you going to be watching out for?
All of the above, Jumana. I would say that cut today that is expected by both markets and economists is notable because it would take the key rate to 4% and so lower than the Federal Reserve. And it would be despite inflation being at a 17-month high. But it's because, as you say, the focus at the Bank of England at the moment seems to be on these slowdowns in growth and on hiring, which comes back to this double whammy that employers are facing of a higher payroll tax and a higher minimum wage. And we just don't know whether there'll be more tax rises in the autumn. You've also had the Bank of England governor saying that the inflation rise is going to be temporary. So that's perhaps why they may choose to go for this focus on growth, even if they don't have a dual mandate like the Federal Reserve. Now, you talk about the vote split. Economists are expecting a 3-way vote split, just like they had 3 months ago when there was a vote to cut. And that reflects this stagflationary backdrop. So we're expecting 2 to vote for a half-point cut because they're worried about the stag, 2 to vote for a hold because they're worried about the inflation, and the rest to vote for a 25 basis point cut. But the surprise could come, as you say, from the guidance. If they drop the word gradual in terms of how they describe the rate path ahead, then our economists would interpret that as a hawkish signal. Because at the moment, markets are pricing in 1 more cut after today. Our economists would interpret that as meaning that November isn't such a done deal.
Yeah. Lizzie, what about tinkering around with the balance sheets? Quantitative tightening, we haven't spoken about that in a while, but could this be a meeting where they decide to lower or temper the pace of gilt sales in the coming years?
Well, as you know, there's going to be a big decision on this in September, but today's the day when we have the press conference. So this is the opportunity to communicate whatever they're going to do with that. And of course, we have seen 30-year gilt yields at levels not seen since the 1990s. So that's fueled this speculation that they're going to slow down active gilt sales or maybe just skew them towards the shorter end of the curve. When the Bank of England was surveying market participants, the expectation was that the overall runoff would shrink from £100 billion a year to £75 billion a year to try to deal with this issue. But basically, if there's any mention of the long end of the curve today, that's going to be seen as a hint that some sort of strategic tweak is coming in September.
Yeah, let's see if they'll give any hints about what's going to happen in September. Lizzie, always good to have you on. Thank you, Lizzie Burden. Now, up next, Middle East retailer Spinneys posts double-digit revenue and profit growth year-on-year. The CEO, Sunil Kumar, joins us next to discuss the outlook. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Spinneys has posted first-half revenue of 1.8 billion dirhams. That is a jump of 14% year-on-year. Profit also saw a double-digit rise of 16%. The Middle East grocer says key drivers include strong sales, higher online penetration, and 6 new store openings. Joining us now is Spinneys CEO Sunil Kumar. Good to have you with us. Let's talk about these first-half revenues, up 13.7% versus the first half of 2024. What is driving the performance?
Thank you for having me, Joanna. All the metrics of the business, if you look at revenue, gross margin, EBITDA margin, profit before tax and after tax, everything is in a double-digit growth. Particularly, I wanted to mention a couple of things. Revenue growth, almost 13.7%. And if I'm looking at the EBITDA margin, it grew almost to 20%. Now, if I'm considering all the metrics have worked really well for us, if I'm looking at the margin which we create, it's a 41.5%. Yeah.
Very high.
And looking at before tax, we almost grew 24%, and after tax, almost 16%.
Yeah.
Now, the reasons why we grew, because we have better customer traction. Our footfall grew almost 12%, and at the same time, we carry the basket, which is 88 dirham per basket, and we continued with the 88 dirhams.
Yeah. Are you gaining market share versus your competition?
Indeed. If you see the traction of the customers, which is almost 12% growth, when as a business which is concentrated on the fresh food and quality service, which is crucial for any businesses which concentrating on the fresh food, you get customers traction, which is a customer's growth, which is almost 12.5%. That is an indication what we offer to our customers as a fresh food segment is being accepted very well and welcomed by those customers.
When you say your like-for-like sales has gone up, are we talking about volumes going up, or are we talking about pricing? Where's the growth stemming from?
That's a very good question, because normally you see when the basket is stable, exactly, and you will think that it is actually you are. So the two things which we have to define here, when the basket is stable, which we are ensuring that we are not charging customers higher to ensure that inflated basket. So we are looking at the pricing points all the time, a responsible way. And what is the differentiation, how it is possible for us to take the margin, is to ensure that the efficiency from sourcing until it comes to the customer's hands, we make it so efficient. And the two aspects which is contributing us is the private label, which is a contribution is getting better, as well as the fresh food participation, which we are known for, which is also getting better.
Yeah, I guess what I'm trying to square up is how you have that margin of around 40%, but the basket value size has stayed at 88. So how are you able to maintain those margins without increasing prices?
So it's a good question, indeed. If you look at our value proposition is purely based on the fresh food. 65% of the business is coming from fresh food side. So the fresh food, the importance of the fresh food, it has a shelf life 1 or 2 days. So you wanted to buy something today, you wanted to eat now, you wanted to prepare at home. So we prefer the customers to come quite often to the stores. That's why we have a 12% growth on customers. And that actually maintains, when the fresh food, which is a better margin, a prominent category in Spinneys, and those categories are growing really better than any other categories. So that gives us a better margin, because it's a complex, complex formula. To get a salad in front of you, or to get a hot food in front of you, a prepared meal, it is very complex. But it is important that customers appreciate what the quality and the price which we offer.
Talk to me about store expansion, what you have in mind for the second half of the year, and then also how the Saudi footprint is right now.
It's a Saudi footprint. We spoke last year, and we opened 2 stores. So far, the performance of the Saudi stores are really encouraging, and we will be looking to open 2 more stores this year. And we will be opening, we opened 6 stores. If I'm taking a 12 months period, we opened 9 stores total. We'll be opening 6 more stores coming before December. And the 2 stores we wanted to open in Saudi Arabia. So Saudi Arabia is a very encouraging business model, and we are thrilled to look forward to Saudi.
Yeah. Any other countries outside of Saudi Arabia that you're looking at as well?
You know, Spinneys is a Middle East brand, and our aspiration to be the brand, the best retailer, fresh food retailer in the Middle East. And we are in Oman, in Saudi Arabia, and UAE. Of course, we will be looking at the opportunities in Qatar, Kuwait, and Bahrain when it is an appropriate time.
Yeah. Are you seeing any cost pressures come through on food pricing? And again, we look at the macro detail of inflation around the world, and there are signs that, at a core level, commodity pricing has started to creep higher. What are you seeing?
So 2 elements. It is not that we can defend the cost. What we are very conscious and responsibly looking at our private label can add value for our customers, understanding the cost areas. So we have buying offices across the world, and if one continent is expensive because of the tariffs and other disturbances which have been created, now we are looking at sourcing the best efficient way from whichever the countries it is possible for us to source. So we are looking at the sourcing capabilities, and we also have a production unit which helps us to understand which are the areas without compromising on the quality, which we can get a right, efficient model product.
Very clear. Sunil, really good to have you on. Thank you so much. Sunil Kumar, the Spinneys CEO. And coming up, Saudi Arabia looks to attract more foreign investors to its stock market with a rush of reforms. More on the kingdom's mission to become a global finance hub next. This is Bloomberg. A rush of reforms is making it easier for foreigners to invest in Saudi Arabia, and that's boosting confidence amongst investors that the kingdom's stock market will one day compete with global rivals. Let's get more with senior markets editor Srinivasan Sivibalan. Srini, okay, let's talk about these reforms. What are they? What are they doing?
Well, thanks for having me, first of all. Saudi Arabia has been reforming with a vengeance in recent times in terms of opening up its market to the world. And we have seen the settlement cycles and the other measures earlier, and the index inclusions and so on. Now they have liberalized GCC residents' access to the markets directly, even if they are no longer living in the Gulf. And they have opened up new institutions like depository receipts and so on. And they have created a technical framework for easier investment access for global investors.
Yeah.
These are more technical in nature, and they will probably take more time to kind of unfold and really show their impact. But these are things that were on the shopping list of global investors. So, 3 or 4 more items have been ticked off in a matter of 1 week in July.
Yeah, and yet the Tadawul is the worst performing index in the region this year.
Oh yes. That's a different phenomenon because of oil primarily. There are global headwinds now in terms of what monetary policy is going to be, where oil prices are going to be, geopolitical tensions and so on. But these are short-term drivers, and Saudi Arabia has indeed lost 9% at the benchmark level. But that masks what global investors think about Saudi Arabia right now. They are turning positive. Inflows are happening for the first time. If you look at cumulative fund flows from 2020, after the reforms, they have turned positive. Right, money is coming in now. So that's not reflected in the index performance, but global investors have turned positive on the market for the first time in many years.
Interesting. Srinivasan Sivabalan, thank you so much. Bloomberg Senior Markets Editor with an update on some of the reforms being introduced in Saudi Arabia to encourage investment into the Tadawul Index. Well, that is it for our show, Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Stay with me. I'm going to be hosting Daybreak Europe in just a moment. This is Bloomberg.